you show up in the 3 agencies database for the first time, you're going to get anywhere from 3 to 350 points just for being in attendance. Okay. So what we're going to talk about tonight is the additional 550 points that you can better your position to help you have the highest scores possible so that you can qualify for the home or refinance that you're looking to get into. We're going to talk about that from the 5 areas of what makes up a FICO or credit score, as you see here on the screen. We're going to talk about payment history, which comprises of 35% of that 550 points. Utilization, how you utilize the available credit that's been given to you. That accounts for 30%. The length, how long you have been in the agency's database or how long you've been borrowing money. That accounts for 15%. And then the last 2 areas account for 10%, but that's new credit, how you've opened up new accounts and things of that nature. And then the credit mix, the mix between installment and revolving accounts. So we're going to give you some tips based upon those areas. So the first tip that I would like to give relates to your payment history, 35% of the score. This is crucial part of your calculation of your FICO scores, okay? Because of the weighting of this area. And so if you ever find yourself in a situation where life is happening, you want to do everything that you can not to go 30 days or beyond as far as the payment is concerned. The late thresholds are 30 days, 60 days, 90 and beyond, right? You never want to go past 30. So what I'm saying is that if you have to make a late payment penalty, okay, but never go beyond 30 days. Do all you can to prevent that. That's the tip. Late payment is not optimal. It's not something we want to do. Obviously, if you find yourself in this position a lot, obviously there's some income issues or something else is going on that you really need to look at. And I would encourage you to do so. But I'm making the assumption that you're just a busy person. I see that a lot with some of the applications that I'm getting. People have the money. They're just like, I forgot. So do whatever you need to do. Put a reminder on your phone. But if you find yourself having missed the payment date, make the late payment. Don't let it go past 30 days. Tip number 2 deals with the utilization, how you're utilizing your available credit limits. This is the only area in my professional opinion that you as a consumer, we as consumers can really manipulate a credit score on a monthly or a creditor's cycle, if you will, 30 to 45 day cycle. And that's because utilization is 30% weighted of that 550 points. And by paying down those balances, okay, you can tremendously help yourself. There's a lot of information online. I respectfully disagree with 92% of it. You shouldn't carry 30% balances on your credit cards, especially not if you're looking to purchase a mortgage. That's going to lower your scores. The best FICO scores that I've seen for those looking to purchase a mortgage are people that utilize their cards between 2 and 9% of the available credit limit. All right. I'm from the school. Also, another pro tip, you want to get the statement date. That's the tip. Statement date when your issuer, the people that gave you, extended the credit to you, you could give them a call or look on your statements and see what that statement or closing date is, because that's the date that they will report your balance and your payment history to the 3 agencies, Experian, TransUnion, and Equifax. So the pro part of the tip is for us, for me, is I don't pay interest. Okay, I don't believe in it unless I have to. Pay good interest, not bad interest. Consumer debt, credit card debt, not good interest. We want to OPM. We're using other people's money for convenience and things of that nature, for cash flow purposes, but we don't want to pay interest. So we want to utilize the available credit limit 2 to 9%, okay, of the balance that's reported to the three agencies on your statement or closing date. And then you want to pay that thing off before any interest accrues where you have to pay interest. If you get that, you're winning the game. I'm not going to belabor that point because there's a ton of things that we can do or talk about with utilization. Let me say this. If you have any specific questions about utilization, ask it in the comment section, or if you want me to make a video on another topic specific to utilization, let me know in the comment section and we'll get to it. Tip number three. Tip number three is we're talking about the age, right? Aaliyah said age ain't nothing but a number, I believe. Yeah, I think that was her. But it's a number that's important in a lot of areas and for a lot of reasons. As it pertains to getting a home loan or a mortgage loan for purchase reasons or refinance reasons, we're really looking at the most recent 2 years, okay? Not that we're discarding anything older than 2 years, but from a collection standpoint, you really want to understand that 2 years and coming forward is what's most important. And as long as whatever was going on to adversely affect your credit 2 years ago, as long as we could document that that's over and it's in the past, not a big deal, okay? Not a big deal. We can deal with it. So say all that to say this. Authorized users, as far as the age tip is concerned, got off on a rabbit trail there, but authorized users is the tip that you can implement if you have what we call a thin or a young credit profile. You want to deal with a family member, someone that's responsible. I wouldn't advise you paying anybody. There's a lot of that going on. Buyer beware. Don't get hoodwinked and bamboozled. But if you can't find anybody in your family and things of that nature, hey, it just takes time. Nothing wrong with time as long as you're moving in the right direction. Eventually you'll get there. The important thing is that you know what to do, the proper things to do to build the foundation so you don't have to go back and try to do foundation repair. So tip number 4, new credit. You don't want to open a ton of credit at one time or even in one annual year time frame, okay? I really like the 2 new accounts in a 90-day period. For sure, no more than 4 a year, right? Once a quarter. But you really want to be cognizant of the hard inquiries and the credit that is extended to you. That can send the wrong signal for potential lenders and current creditors. So you really want to guard the inquiries, do your research, do your shopping and things of that nature before you just willy-nilly and open up accounts. Here's the tip. If you're shopping for a home loan, the CFPB, the Consumer Financial Protection Bureau, says you have 45 days in which to do so, and all the inquiries will count as one inquiry. I agree with them 100%, but for everyday folks, we find that 14 days is where you really want to shop. Your 1 to 2 lenders, for sure no more than 3. So you're not confused and you get the information out that you need so you can get it back. But the good news is, regardless of the inquiries that might show up on the credit report, if they're mortgage related, they're going to count as one inquiry. Okay? So the last tip is credit mix. So after we've done the first 4, okay, we want to make sure we have the right mixture. Some of you all are dead set. I don't know if Uncle Dave, Ramsey, or whoever said no, it's a part of the game. Even if you don't use the credit card, you gotta have a revolving line of credit, because once you pay off all those installment lines, you don't have anything reporting, and over a period of time, it will negatively affect you, right? So make sure you have a revolving line of credit. If it's something that you don't need to use, and you're gonna use wisely because you need to use it, but use it for things like gas, groceries, stuff that you would normally use it for, and then you're going to pay for it. Come back on a weekly schedule, pay it off, find that statement date, utilize that trick, that hack, get some points, and grow your credit. right? Grow your credit so you have access to leverage. Cash flow is very important, not just with businesses, but with folks, especially now and today. So here's the deal. Let me ask you this. If you learned anything in today's episode and you're listening via podcast, subscribe, first of all, to the channel and leave a review. Okay? I thank you in advance. If you are watching on YouTube via YouTube podcast, subscribe, hit the notification bell, leave a comment. And again, if you want to know more about that utilization thing that we talked about, leave a comment and specifically say, hey, Robert, we want to know about X, Y, and Z. So that's the show for this week. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. And until the next time, peace. Y'all be blessed.